Today, we will examine in the finest detail one of the top names in the financial world, Ken Griffin, and the highly unconventional technical analysis philosophy that forms the foundation of the massive Citadel empire he built. For most amateur or professional traders, the first images that come to mind when technical analysis is mentioned are support and resistance levels, RSI divergences, or MACD crossovers. However, when you enter Ken Griffin's world, these concepts are replaced by a completely different terminology and perspective. For Griffin, technical analysis is not about searching for geometric shapes on charts. It is about viewing past price behavior as a massive statistical data set and solving the mathematical patterns within that data with the precision of an engineer. In his perspective, a head and shoulders pattern or an ascending trend line is not a subjective drawing, but a complex reflection of probability distributions and statistical deviations within a time series. Griffin's analytical journey began in the late 1980s in a modest dorm room at Harvard University, with a step that was considered crazy for its time. As a young student, he realized how critical it was to access real-time market data and installed a bootleg satellite dish on the roof of the dorm building, succeeding in receiving data on equal terms with the giants of Wall Street. This antenna was not just for seeing prices, but for creating an information advantage by collecting data faster than his competitors. Griffin's first major success, convertible bond arbitrage, is actually the purest and most mathematical form of technical analysis. This strategy aims to capture microscopic mathematical disconnects between a company's stock price and the prices of that company's bonds and options. Here, the intuition, based on chart interpretation in classic technical analysis, is replaced entirely by a mathematical model. Even in those early years, Griffin understood that the way to gain a permanent advantage in the markets was to process data faster and more scientifically than anyone else. When he founded Citadel in 1990, Griffin started a veritable revolution in the hedge fund world. At that time, funds were generally star trader-centric, meaning all decisions depended on the intuitions of a single genius. Griffin, however, designed Citadel more as a technology and data factory than an investment fund. By introducing the multi-strategy and multi-manager model, he gathered hundreds of different strategies under one roof. In this structure, technical analysis evolved from being an individual skill into an organizational system. Today, thousands of mathematicians, physicists, and data scientists working within Citadel analyze the markets as massive equations. For them, price series, volatility models, and correlations between assets are laboratory data to be experimented upon. In Griffin's world, technical analysis is not about reading charts, it is about establishing pattern mathematics. In other words, it is not enough for a pattern just to exist. How statistically significant that pattern is, how often it repeats, and what the probability of success for those repetitions is, are all tested with computer models. The quantitative approach used in this process completely bypasses subjective decisions. The most critical part of this system, and the primary factor that sets Ken Griffin apart from his competitors, is his obsession with risk management. According to Griffin, trading success is measured by how well you control your risk rather than how good your strategy is. At Citadel, every trader and every algorithm operates with strict position limits, volatility boundaries, and maximum drawdown limits. The reason Citadel not only survived periods like the 2008 financial crisis, which saw the demise of many giant funds, but went on to break records afterward, is this discipline of technical risk management. For Griffin, risk is not just a possibility, but a set of variables that must be measured and normalized every second. No matter how much profit a trader makes, if they exceed the risk limits, that system is considered a failure at Citadel. Because in Griffin's philosophy, markets are a data problem, and the solution to every data problem passes through disciplined risk modeling. While setting a stop-loss is a choice in classic technical analysis, in Griffin's system, it is a mathematical necessity. The use of technology is another key to Citadel's dominance in the financial world. Today, the firm operates at the farthest frontiers of technology, from high-frequency trading to machine learning. Citadel Securities is currently responsible for approximately 20% of the transactions in the U.S. stock market. This represents an incredible power in market making. Behind this power lies an algorithmic technical analysis that operates at 1,000th of a second, processing millions of data points simultaneously. This level of technical analysis is no longer something the human eye can see. It is a world where machines compete with machines, and where speed and data accuracy are the absolute rulers. In building this world, Griffin changed the intellectual profile of Wall Street forever by hiring not just traders, but the world's best computer scientists and physicists. It is no longer enough to just read a chart. One must know the signal processing techniques capable of filtering out the noise within the data that forms that chart. Griffin's management style and the competitive culture he established are discussed as much as his technology. At Citadel, there is no tolerance for low performance. However, there are no limits for those who demonstrate the highest performance. This harsh culture is actually a reflection of the nature of the financial markets themselves. Griffin knows that the markets are ruthless, and he believes that this ruthlessness can only be countered with a perfect organization. This is exactly what makes Citadel look more like a technology company than a hedge fund. Research, data, trading, and risk teams working in flawless harmony like the gears of a machine. This approach, which prioritizes the genius of the system over individual genius, has made Griffin one of the architects of modern finance. What matters here is not one person making a correct prediction, but thousands of small transactions having a statistically positive expectancy. Ken Griffin's outlook on the market is not limited to micro-scale price movements. He also possesses a powerful macroeconomic vision. He views global capital flows, political balances, and America's innovation power as part of his investment decisions. To him, America's greatest advantage is its capacity for innovation, and this capacity will always draw global capital back to U.S. markets sooner or later. When this macro view is combined with microdata from technical analysis, a formidable investment philosophy emerges. Unlike names like Jim Simons, who built a structure focused entirely on mathematics, Griffin has been the pioneer of a hybrid model that blends quantitative data with fundamental analysis and a macroeconomic perspective. This has enabled Citadel to become a power that not only follows trends, but also analyzes the market conditions that create those trends. We can build his philosophy on three fundamental pillars. First, the reality that markets are a massive data problem to be solved. Second, the fact that risk management is more of a priority and more of a lifesaver than any trading strategy. And third, the reality that the best designed system will always win, rather than the best individual trader. Ken Griffin's story shows us that technical analysis is not just a hobby performed on charts. When blended with data, mathematics, and technology, it can transform into a massive financial weapon capable of changing the world. This journey, stretching from that satellite dish in a Harvard dorm room to today's multi-billion-dollar Citadel empire at the heart of global finance, is actually a victory of unwavering faith in data and systems. Ken Griffin has proven to us that markets are not just places where money is made, but arenas where science and technology collide in the harshest possible way. When we examine Griffin's technical approaches more closely, we see his mastery of statistical arbitrage. This involves calculating the deviation of an asset's price from its fair value, not through technical indicators, but through its relationship with other assets. For example, when the stock of an energy company deviates from its historical correlation with oil prices, Griffin's systems accept this technical mismatch as a buy or sell signal. This is a far more sophisticated approach than the classic effort of predicting the direction of the price. Here, the bet is not on the direction, but on the return to the equilibrium point. This systematic approach is the most important shield protecting Citadel even during periods of volatility. Citadel's high-frequency trading units analyze the market's order flow to identify where major players are taking positions and where liquidity gaps are forming in the market. This is essentially the most advanced level of technical analysis, observing the battle between supply and demand within microseconds. In conclusion, the success of Ken Griffin and Citadel is no coincidence. This success is the result of viewing the market not as a casino, but as a data science laboratory. By setting aside traditional technical analysis tools and trusting the power of statistics and mathematics, Griffin has written his name in golden letters in modern financial history. No matter how the financial world changes in the future, regardless of how much artificial intelligence and quantum computers develop, this fundamental data, system, and risk-focused approach established by Griffin will continue to be the unchanging formula for success. As we have seen throughout this video, being permanent in financial markets is not just about looking at charts and drawing lines. It is about having a mind and a system capable of making sense of the massive pile of data behind those lines. Thank you for watching our video. In the next episode, we will examine the journey of another legendary trader. Don't forget to subscribe and turn on notifications. For more content and strategies, you can join our Telegram channel. The link is in the description.